Hey traders and investors, it's Christopher Mullen from thetechnicaltraders.com. I want to talk today about a short-term view. Now recently I shared with you a video talking about gold, the long-term perspective of gold and miners and silver, and of the overall stock market and how I think it's going to go a whole lot lower in the long term over the next 3, 8, 10 months or so. But let's step forward and take a look at what's happening right now in our short-term analysis. Now, here the chart is the NASDAQ, the QQQ on our left hand. This is the daily chart. On the right hand side is the daily chart of the QQQ, but the market sentiment. And this is going to lead into where I think precious metals are going, what to expect for not just the stock market, but what's going to happen probably with miners and metals in the near term and then longer term. So the grand scheme of things on the left here is our consistent growth strategy. This is telling us when the bars are red, we don't want to be involved in the stock market, period. We don't want to be long. We don't want to hold any stocks or assets. When we have green, it means the market is favorable for a trade. And this was our last little trade. We made some money on it, got out. The market went back into a downtrend. We had a new trade here back in July, brought us through into August. We had a nice little trade there with a bunch of sectors, got back out. The market has now gone down, broken down below the June lows. And now we're starting to get a bounce. And so what the nice thing about a strategy like this, where you follow the trends and you manage positions and risk, is that you don't hold assets that are falling in value. And that's my number one core focus and strategy, is to not hold anything falling in value, no matter how much you love it. So let's take a look at the sentiment on the right hand chart here. Now, what I want to show is when the trend is down, what we see some very strong rallies. Remember, some of the strongest short-term rallies happen during a bear market, during downtrends. Now take a look at this rally. This was about a 10% rally. Over here was a 9%. We had a great big tradable bounce here, which is this on the other chart. You can see this was the tradable bounce that we played. Over here was another knee-jerk reaction bounce. We had another one here, another big one right over here. We had another one over here. We had one recently, just a few weeks ago. And I've been talking with subscribers that we're primed and ready for another significant bounce of probably 6, 8, 10% going forward. Now, here's what's really interesting. Now, this is our own proprietary strategy that tells us what the market participants are thinking and feeling and doing with their money. And when the trend is down, especially when you look at the left-hand chart, when it's all red, you do not want to be holding any stocks. Generally, they're all going to go down. There may be the odd trend or sector that bucks that trend, but you're really picking the needle out of a haystack. The odds are against you. Now, what's interesting here is when it's red, this chart, deep red, that means everyone is fearful. They're panicking and they're getting out of absolutely everything. And that usually means they're going to cash, and we tend to see the US dollar do very well. Now, if you notice, there's these green bars up here. There's a deep green bar, very hard to see, and then a lighter green. That's telling us everybody suddenly flipped and got really bullish, and they piled into the stock market, into growth stocks. And then what happens after that? The stock market collapses and takes all their money. Well, we got some orange bars here after a very strong rally. Investors, traders started to get bullish. They moved their money in, and then the market sold off again. We saw the same thing over here. It's hard to see it, but there is a green bar right in here. Everybody got very bullish. The market crashes. We have another green bar. Gets very bullish, the market crashes. Got bullish for about a week and a half, sucked in a lot of traders and investors, and then the bottom fell out, took all their money again. It happened over here, it happened over here, and we're back into this. We had a big bounce, which this was a tradable bounce that we actually traded with our CGS strategy. And then we played the US dollar index actually as the market rolled over. So we were actually generating returns while the market was collapsing in this last move down. But we had a green bar over here. I know I'm repeating myself, but we're looking for some type of green bar here over the next several trading sessions. And we've been talking about how the market is ready for one of these bounces, and pretty much all sectors are going to just bounce right up in value. When the stock market goes up, it lifts. It's like a tide. It lifts almost all boats. The leaders will perform the best. I think precious metals, they have been actually performing very well in the last 3 or 4 trading sessions compared to the stock market. that's telling us they're leaders right now. They're at the top of our band hot list. I'll show you in a second. And I think they're going to have a very significant bounce. Now, I'm not saying now is the time to get into the stock market. Buying right now is nothing more than buying one of these emotional rallies. The stock market isn't confirming that we should be buying stocks, but this type of price action is exactly what sucks traders and investors into the short term to get chewed up and spit out a little bit later when we get lower prices. So just be aware. I think we've got a very nice tradable bounce for aggressive traders who are very good with their position risk management. But overall, it is a high risk trade, but I am expecting higher prices. So take a look at the hot list. Here's our hot list. SILJ is top of the list in terms of performance. You can see the chart here, very strong rally for the past week, just been moving up and up. GDX, the large cap gold stocks, are doing very well also. Let me pull those up. Now you can see here, definitely they're all still in a kind of a long-term downtrend. Once this chart loads, the trend is definitely down in the precious metals sector. So this is, this is a counter trend trade, carries high risk. I don't do counter trend trades, but I'm sharing this because I know a lot of people follow precious metals. A lot of people are going to probably get sucked into another bounce and rally. They're going to load up again, and then maybe a month or two from now, they're trading at new lows and, scratching their head going, where the heck is the bottom here? So this is a great opportunity for aggressive traders. But again, the trend is down, the odds are against you. And I'm really just sharing this so you get an idea of what the market is doing, how it's going to potentially suck people in right near a high and then roll over, continue to go lower. We are in a bear market. If we look at GDX, this red bar here, or bearish here, it's telling us we are in a bear market. Silver miners are trying to recover, but they're still in a very strong downtrend. What's interesting that we got XOP, which are the exploration, natural gas and oil companies. They're kind of like the energy mining stocks. We're definitely seeing those do very well, up 6% today. For some reason, the data here is loading pretty slow, but we've got COPEX and URA. So copper miners and uranium stocks are also top of the alternate list of different sectors that are performing very well also. Again, all of them, we are still in a downtrend in the stock market. Doing any type of trade right now should be very short-lived. You need to be able to get out if it rolls over. But I want to just share with you that there's potential. We could see a 10-15% bounce in miners very easily, if not even double that going forward. So just be aware. There's opportunity, but you need to trade it very aggressively. We won't be touching it with our strategy until we get a buy signal in this market. If we get a buy signal, it probably means it's going to go a heck of a lot higher. But we're still several days away from potentially getting a buy signal for the stock market and for these sectors. And buying before that is really, to me, is a very high risk trade. So I just want to share this information just so you know. I know a lot of people want to trade the miners. They've been waiting for them forever. But this is just an oversold bounce at this point, so just be very cautious. It might be short-lived. Anyways, that's it for now. Take care.